Hello, everyone. Welcome to episode 12 of StellaVision, Stella Rising's weekly marketing update. I am so glad to have you here. I'm Marleah Clark, CMO of Stella Rising, and today I am thrilled to have our Chief Digital Officer, Brandon Heagle, back to discuss what's happening, because it changes constantly, in the digital and e-commerce landscape, as we're seeing physical stores reopen in some areas of the country and then heading back to closure in others. It's certainly an uncertain time. Brandon is really staying on the pulse of these constantly changing consumer trends, as well as those within our specific client portfolio, so we can really see that data in real time to help us and our clients strategize for what's coming next. Please submit questions as we go in the panel. We'll answer as many as we can, but please feel free to reach out to Brandon or to me anytime. Right now, let's get started. Hey, Brandon.
Great. Thank you so much, Marleah. And thank you, everyone. Happy Friday morning. Appreciate you taking the time out of your day to join us. So this week, episode 12, we're going to be giving an e-commerce update, as Marleah introduced, talking about the shifting sands of the COVID-19 economy. You know, what is changing, what is staying consistent, and what are we seeing in terms of overall trends, and how do we look ahead in terms of how we, play these trends out, for our own retail benefits. So we wanted to start out by looking back. These are some of the things we've seen consistently happening in terms of consumer behavior from the start of the pandemic. So before we go forward and look at current trends and talk about what we see in the future, we wanted to start by resetting that baseline for those of you that are not aware. And so ultimately, as we know, the pandemic arrival has really changed consumer behavior. Everybody has started with their shelter-in-place orders back in March. And that dramatically altered how people were behaving in terms of some, consistent general ways of being, and created this new normal with the time spent at home. So the first thing, almost immediately, there was a massive spike back in March of web traffic. And whether you look at Comcast or Verizon or, any other major broadband provider, they all saw spikes, 20, 30% right out of the gate, in the initial weeks. And that web traffic has really stayed consistently elevated, plateauing, in the last few weeks at around, 30, 33%. And again, it varies depending on provider, but you're going to see that elevated level has remained consistent. And so what are people doing? Well, they're online more, right? They're spending more time on their devices. They're spending more time consuming media. So we've seen certainly more time spent with social and more time spent with video and media consumption. We've seen a lot of increase in terms of overall, PC and console-based gaming. So ultimately, consumers are really doing the things that are keeping them entertained, keeping them informed, keeping them communicating, keeping them educated. Those are really the key trends we're seeing in terms of what's happening with online, user behavior. In addition, obviously, with the retail footprint having been closed in many markets for a period of time, there was a dramatic rise in e-commerce, which we're going to talk about a little bit more closely today. Recently, in the last month, eMarketer revised their forecasts up from what they had originally seen in terms of growth, with about 18% growth in e-commerce projected for this year. And that makes sense, right? People aren't able to get the goods and things they need in the physical world as readily, or they want to make less trips out into the physical world for health and safety reasons. So they supplement that buying things online. And so that's led to a surge in online spending, which we'll spend a good amount of time today talking about. And in addition, people want to stay connected, right? With social isolation and until markets started to open up, people really were only able to communicate, via virtual messaging and capabilities. So Facebook had reported they saw a significant increase in terms of their overall Facebook messaging app usage. They had created their own rooms capabilities for, having web chats, group chats. Zoom has become a commonplace term, right? Hey, are you going to Zoom me? It's almost like become the de facto, similar to Rollerblade or Kleenex, where their brand name has really become synonymous with web chat at this point, based on how quickly it's been adopted. So those are some of the common things we've seen, and those have remained fairly consistent from the time the shelter-in-place orders started back in March all the way until present, as we're starting to open up in different markets. So as we talk about the e-commerce growth, I think it's important to put in perspective just how rapidly this growth has occurred in the last few months. If you looked at the first 2 months of the overall period, there was a 20% rise in e-commerce penetration as a percentage of retail sales. So if you look at that, put it in perspective, over the past 10 years, there's more growth in the first 2 months of the shelter in place than there was in the previous 10 years combined. So it is a dramatic, rapid shift to online buying, again, based on the conditions accelerated by the pandemic. In addition, if we take a look at which retail channels are ultimately the winners and losers in terms of what's happened as a result of the pandemic, this is a kind of indexation comparison of what is happening in 2020 by retail channel versus the year prior in 2019. Those in the darkest purple represent the greatest overall growth in indexation. And then the lighter we go, all the way down to green, is where there's actually a decline, where it's indexed lower than it was the year before. And so what we see that we can interpret from this is that the two strongest areas have been online and e-commerce, as well as home improvement, which again makes sense. People are home, they're spending more times in their homes. We have certainly weather warming up, so home improvement also would include things like doing landscaping and gardening and things of that nature, right? Visiting the local Home Depot or Lowe's, Ace Hardware to pick up the things they need. So those two make a lot of sense. In addition, we're seeing, some of the other categories that have seen a rise are certainly dollar store, club, and food, as well as liquor stores. So again, people are spending more time buying the things they need to do from home. They're not going out to bars and restaurants, right? So they need their libations within their own home. Club and dollar represent a flight to value, right? As people are worried about, furloughs and unemployment and the economic impacts, they're looking for opportunities to get more value with their purchases. Conversely, we see things like beauty is down, well, because they were closed, right, until recently, which is why you see that number starting to creep up. As markets start to open up, Ulta and Sephora in particular, we're going to start to see that number start to come back a little bit, but probably, it's going to be a while until we get to previous levels. Similarly, we see drugstores are flat. Again, I think people try to avoid them. They don't want to get exposed to people that need medicine and are sick. But if they themselves need it, they have to go there from time to time. And also from a value perspective, in a gas and C store, people are not going out into the retail world. They're not going to gas stations because they're not driving as much, right, until things start to thaw back out. So I think this is a good kind of way of understanding and looking at, sector by sector from a retail channel perspective, where people are spending and where they're not. So shifting over from kind of what we've seen happen, from the start of the pandemic, how are we seeing those trends play out now, and in particular with e-commerce and in demand? So overall, this is a good visual, I think, to get a good feeling for how pure play e-commerce has kind of been trending over the pandemic period. So of course, you can see February and early March was relatively flat to baseline. And then of course, as we moved into March and people started kind of panicking and trying to make sense of what was going on with the pandemic, a lot of brands pulled out of the market. They kind of paused and reassessed, how do we handle our messaging? Where should we be investing? Are people going to purchase from us? Should we even be advertising right now? What's the right strategy? And then sure enough, as is typically recommended as best practice, those brands understood that there's still market demand. In fact, as we just talked about, consumers need to purchase online. So a lot of those pure play e-commerce brands started to come back into the marketplace and started to realize that they could get decent, you can see conversion rates spiked, in mid-April. They started to really come back and invest, and we started to see some growth. So April kind of leading into kind of May led to a little bit of a recalibration where we were seeing performance, a little bit stronger than baseline. Again, this depends sector by sector. This is kind of an overall cross section of the entire e-commerce landscape. Certain categories were stronger than others, and this takes all of them into consideration. And then, of course, in June, there was, you can see the blue line, which represents Facebook spend. There was a massive decline. And that, again, was the second time where brands really needed to pause, with all the protests and things that were starting to take place in early June. A lot of brands, again, paused to figure out how do we need to handle our messaging and should we be, spending. And of course, in June, we see things, again, start to recover and come back, but really have normalized. I think for the most part, we're starting to see, things kind of were below, then above, and now kind of returning to kind of a baseline level in terms of overall e-commerce. But that said, with elevated growth overall, as different retail sectors are being recaptured through e-commerce. And of course, in early July, as we look at the next version of this, I'm sure we'll see another dip based on some of the other positional, withholding of funds for platforms like Facebook based on, different brand points of view on how they're handling a lot of their policies. So digging a little deeper into the sectors of what we're seeing in terms of search demand, this is from our friends at Google, who provide search volume based on Google Shopping by individual subcategory or by category. And what we're seeing here is similar to what we saw in the previous chart, is that there's a pretty consistent baseline in terms of search demand heading into March. And that's where we start to see deviation. Some categories spiked, like fitness and sporting goods. Again, gyms are closed, people still want to work out, they need to figure out how to change their fitness routines. And so a lot of people needed to figure out how to do these things from their own homes. And so you can see some of those were early winners with significant jump up as soon as the shelter in place orders went into effect. Conversely, if you look towards the bottom, there was certainly things like apparel and accessories and jewelry, luxury goods, large ticket electronics. Those things were seen as necessities or were seen as luxuries and not necessities. And really what's happened is the demand has really been for utilitarian, essential, and boredom solving categories, as well as essentials versus luxuries. So as time has continued, we've seen that's really been where the vast majority of demand has been. What's interesting to note, however, is that recently a lot of the lagging sectors have now also started to recover. So you can see jewelry and apparel and accessories in the last 7 days have seen upticks in growth. And actually everything listed here from a category perspective is actually above baseline from where it started in the pre-pandemic period. So this is to show that not only were kind of some of those initial categories winners, in terms of growth from a pandemic perspective, but also some of those laggards are now normalizing to demand levels as they were in the pre-pandemic period. And this is a good representation of that, looking at jewelry specifically. And jewelry obviously can span from more common everyday wear items to more luxurious items. But again, as people focused on necessities early on, you can see that dip below. And across the board, these categories are now seeing some recovery, with even precious gems, well above where they were prior to the pandemic period, with a 26% search volume growth in terms of demand over the last 7 days. Beauty has been, for the most part, a winner in terms of the e-commerce landscape and the online search demand. Again, as we saw in the earlier slide, with Ulta and Sephora shutting their doors, she still needed to be able to get her routines taken care of. She still needed her cleansers, her lotions, her daily rituals. And we know that it's been soothing and helps combat some of the anxiety of today's times to have her routines and rituals and self-care. And so we do see that there was actually, a little bit of a dip back in March, like there was everywhere else, not quite as pronounced as other categories. But then there was a rapid acceleration, which is well above baseline across most of the beauty category. The sectors here that were lagging a little bit were foundation, color cosmetics in particular. But we can see, with the exception of foundation, which is flat over the last 7 days and kind of at baseline, most of the other categories have actually seen a pretty strong uptick. Again, the first week of June, we see that dip, right, as brands kind of pause their markets messaging and retrench to kind of identify, how they wanted to handle, the current events. But we're seeing that now start to recover, as we go through the month of June. So beauty has been a strong e-commerce category overall. And so looking at those benchmarks, this kind of shows some of the sub-metrics, not just demand, but what are we seeing in terms of the actual, engagement and value of that demand. And so looking specifically at search and shopping, in April, we saw surging conversion rates, as we just saw, as barbers, salons, stylists, and the beauty retailers were closed, and people turned online to meet their self-care and grooming needs. And that includes everything from makeup and skincare to clippers, right, for haircuts and things of that nature that we couldn't get in the physical world at that point in time. Then as local services began opening in May, there was a shift in some of that demand. So you can see that start to decline a little bit because this is, again, the broader category, not just looking at skincare, color cosmetics, but all beauty. And online bookings were up significantly, which offset, right, some of that initial growth. And so as stores and salons and things reopened, we do see that there was a little bit more of a competition and declines in conversion rates, and increased cost per action, but that was partially offset by lower cost per clicks. So kind of normalized supply and demand. So at Stella Rising, we like to keep track of our client portfolio as well to get a good understanding of how we're seeing the trends play out within our agency environment, within our client base. We do a lot of work within the beauty environment, beauty category, as well as in retail, as well as in CPG, in particular, food and beverage. And so kind of taking a cross section of what we've seen here as it relates to the broader data that was shared at this point. Ultimately, we've seen e-commerce revenue has gone up slightly, about 17% from a year ago. But we're starting to see normalization consistent with the trends of what we saw earlier. Our beauty business is up about 34% from where it was a year ago across our client base, and retail is relatively flat. Again, we're seeing that it was initially a little bit down and then started to recover, and luxury brands are actually starting to improve and reverse the trend. So an interesting thing to note is that although we have seen for the most part a flight to value and necessity, we are seeing luxury and some of those other categories start to recover a little bit more now than they were in the previous months. When we look at kind of social and video overall, video completion rates are not quite as strong as they were at the onset of social distancing, but we are seeing that YouTube performance is actually stronger than ever for this reporting period going back to March. Video completion rates are up about 1.7 times what they were the prior period, and Facebook and Instagram video completion rates are up about 4% from the prior period. We're seeing Google start to normalize as well. So as we look at some of their products, YouTube, GDN, shopping, Gmail, search, etc., we're still seeing that we're stronger than pre-COVID-19, but that ultimately we're starting to kind of normalize, to where we were. CPCs are down by about 18%, and click-through rate is up about 28% to where it was prior period. And social also, we're seeing higher click-through rates, which were up about 44% from where we were a year ago. So overall, media performance is fairly strong, and performance is starting to normalize to kind of baseline. Okay, so we saw where things started. We saw what stayed consistent. We've seen what some of the current trends are in benchmarks. So where do we go from now? What's changing? What are we expecting as we move forward? Well, we're seeing rapid changes. I think we had a shelter in place that was a massive change. We had states start talking about reopening at a local level. Almost the entire country, as of June 16th, was reopening. And just 2 weeks later, on June 30th, look how different that looks, right? 3 states are reversing: California, Texas, and Florida. Many states are pausing, about several of them on the map here in the kind of pink color, with the rest of the country still moving in reopening or reopened states. So what we know is happening, obviously, is that if we pay attention to the news at all, that the cases are spiking, right? Nothing has really changed. There's not a vaccine. The things that really kept numbers coming down was following proper protocols of wearing masks and social distancing and safer and cleaner stores and limiting congregations. But what's ultimately happening now, as we see, is as things start to spike, it's going to create local level challenges of determining what policies will be in place and what will happen in the local retail markets. So how does that impact what we're calling the COVID consumer, right? In the current COVID period, how is the consumer behaving, and what are their new sets of expectations currently and most likely in the post-COVID era? Well, as we saw earlier, she's still prioritizing value and essentials. So most Americans still believe that there's going to be, the economic recovery is going to take longer than another 6 months, over 66%. So we're talking about 2/3 of the US population. So given the duration, there's economic worry, right? There's still many people that are fearful for their jobs and trying to make their payments on their homes and their cars and keep food on the table. So most Americans are still prioritizing value and essentials, although we have seen some recovery in some of the other categories like apparel and luxury goods. For the most part, it is still about prioritizing those categories. We're also seeing a continued shift to digital and omnichannel. So as we talked about earlier, we've seen that significant growth, But most people are expecting to continue to make a portion of their purchases online, even post COVID-19, with many different sectors ranging in 15 to 30% growth post COVID-19. So some are shifting completely online entirely and not planning to go back to certain segments. So that is, I think, something to note. Although we're seeing that, we're expecting retail to get back at some point, I do think we're going to see permanent impacts in terms of the consumer behavior. We are going to see a continued elevated level of e-commerce growth and shopping, and more buy online, pick up in store, behaviors. Those things will continue for some time, maybe permanently. And contactless services have certainly seen a rise. Many consumers still intend to continue to do so, especially things like self-checkout and drive-throughs and contactless payment. Those are things where, in general, I think people don't want to risk if they don't have to. And those things will likely, once you start a new behavior and you get accustomed to it and you adopt it, it's likely to sustain, whether it was started because of the pandemic or not. Once that becomes a new habit, it's something that's likely to continue. A third thing we're seeing is a shift in loyalty, at this time. So 75%, 3 out of 4 consumers have tried a new shopping behavior, whether that's a method, whether that's a new brand, whether that's a new place to shop. A lot of people are open-minded right now to trying new things. Well, what are the main reasons that people say they have shifted their loyalty or been willing to try new shopping behaviors? Availability. All right, if they go to their first source and they can't get what they want and they need it, they're going to go find it somewhere else. So that's number one. 2 is convenience. I think the best example of convenience is certainly looking at Amazon. I mean, they've focused on the consumer. They were able to rise and grow their business so successfully, primarily by really focusing on making a great consumer experience and creating frictionless consumerism. Right? You want something, you think of it, you can instantly shop with one click or one swipe, and it's on your doorstep in a day or two. It can't get more convenient than that. And so, I think that's something that helped them win, but also other retailers and brands that are able to make a convenient experience for the consumer are also going to win trial. And value, clearly, as we've talked about, is an important reason for why people are trying new retailers or brands. 60% actually claim they were influenced to make a change based on digital channels that help them decide where to shop. And social was really the category that stood out the most as helping influence that trial. And then the fourth element, value, the COVID consumer values companies that are prioritizing health and caring, right? They want to know that, they're aligned with the values of the brand and the brand cares about them and they're going to make them safe in a retail environment. So the two, number 1 and 2, close second were cleaning and masks and barriers. The consumer needs to feel safe. And if they feel safe, this is the most important thing. If they feel safe, they're likely to come into the store. But until they feel safe, they're likely to stay home. So care, convenience, and quality are other key aspects that leave a positive impression on the consumer. So the homebody economy, right? We talked a lot about shelter in place. Now things are opening back up. Well, who's going to rush out? Who's not? Well, the vast majority of people are still going to stay home, right? Until they really feel safe. They're still planning to stay home most of the time. This will change as states reopen, as people feel safer, in certain states and local markets where there's not as much anxiety or fear or health risk. You'll see those places start to warm up a little bit more from a retail perspective. But in general, the vast majority are still planning to stay home most of the time. 73% are still waiting for key milestones before they engage in out-of-home activities. So they want to really make sure that there's things that they feel safe, and if they get safe, there's treatment, and if there's a vaccine, all those things are going to help a lot of people get back to a state of normalcy. It's worth noting, though, this is down from 82% just 2 weeks ago, 2 weeks prior. So it is moving, as things kind of thaw out and people start to go back into retail. But I guarantee you, as soon as, you see spikes in your local market and people start getting fearful and hospitals run out of capacity, if that happens in a local market, this trend will reverse. People need to feel comfortable and safe. That's really the most important part. More than 1/3 plan to leave home only for shopping and socializing in the next 2 weeks. Greater than 50% are worried about engaging in out-of-home shared services like public transport, airplane travel, and ride sharing. and greater than 50% intend to continue with new at-home entertainment habits that they adopted during the COVID-19 period, such as watching esports and online gaming. So again, a lot of the trends we saw start are going to sustain and continue. We also wanted to close by spotlighting Gen Z, just to make sure people are aware as they plan their retail futures, just how important this generation can be to their economic recovery and to their brand future. Ultimately, better understanding Gen Z is going to help shape that retail future. So 40% of consumers in the US this year are going to be Gen Z, 40%. It's going to be a very large segment of the purchasing power, controlling 143 billion of that purchasing power. And 49% say that they're willing to change or will be changing their purchasing behaviors post-COVID-19. So we talked a little about what the general population is looking for, but what specifically is important Gen Z that's going to help you win them as a consumer cohort? Well, they're 3 times more likely to say that the purpose of business is to serve communities and society, and they're going to seek out brands that match their values. So this is a very, very cause-driven group, very value-driven group that really wants to do good and see brands do good and have values that align with their own. And if brands espouse those same values, they're much more likely to support those businesses and be a consistent, loyal shopper to those businesses. 50% are shopping online more than they were during COVID-19. Again, this is a greater percentage than the overall population. And 34% of them say they're going to continue to do so post-COVID-19. So again, they're an important segment who's going to continue to buy online, which means you have to have a good online user experience. But you also have to have a good in-store experience, because although a lot of people think Gen Z grew up as digital natives with a mobile device in their hand and on social media, and they grew up on iPads, and learned how to do a lot of things digitally, before anything else. The reality is that they still really love going to stores. They still love going to discover products in person. So 73% say they like to discover new products in person. So when thinking about your store design, not just in terms of safety and how you're going to really make sure the consumer feels comfortable coming back to the store, it's also important to keep Gen Z in mind in terms of the things that they like and value, because they're going to, really want to come in and experience the stores as well. And lastly, they're a very positive group. They're twice as likely to give positive feedback than complain. So all you really need to do is ask and allow them to contribute and allow them to help the brands they love evolve. So if they feel a natural affinity, they want to invest in the brands they care about that espouse those values. They want to help have a voice and a say and help those brands evolve too. So engaging with them and listening to them is something that will really help. I think brands of the future. So that brings us to the closing. I think we might have time for a question or so, but if anyone has any additional questions, by all means, please feel free to reach out via email to either Marlea or to myself, and we'd be happy to continue a conversation.
Yeah, Brandon, that was so great. Brandon and I are always joking before we start that we should change this from saying 15 minutes to half an hour. But I really think that the information you give, Brandon, is just so useful to brands. And I know I learn something every time you present. So with that said, we do have time for one question I wanted to do, and then we really will be happy to follow up. If anyone has any questions, as Brandon said, please reach out directly to Brandon or to me. We certainly would love to continue that conversation. But the one question I'd love to sneak in, because I think it's such a good one, is with all the continuing changes you've just talked about in local retail environments, what do you see physical retail doing? Is it going to play a significant role in the retail sales mix in the near future?
Yeah, and I think for sure it will. As we just talked about with Gen Z, clearly they like the in-store experience and they want to get back to store. In fact, if you look at who's returned to store, it's actually that group. They're the group that were the first to rush back into store. One, because I think there's a couple of key things. One, what's the local market look like? How safe does it feel? I talked about that in the presentation. Two, how essential is the item, right? If it's something like grocery, we see people are still going there. Home improvement, people are going to those stores because those are priorities right now. But if it's a nice to have, or, or kind of fun shopping, those are things that I think are going to lag a little bit with the general group, general population. But outside of essentials, if it is something that is catering towards a younger consumer or a consumer that's in a market that feels safe, they're much more likely to return to retail. Now, in general, I don't think that there's going to be a rush back to retail in the numbers we really want to see a true local retail economy until people truly feel safe. And that means that we have the right sorts of medicines and treatments, and ultimately, I think a vaccine where people don't live in fear and have anxiety that they could catch COVID. So once we see, I think, a local sense of safety, then I think you're going to see those numbers uptick. But although we will most likely get to that point in time, sometime, no one knows exactly when, but in the next year or two, most likely, I think you'll see retail be a very important part, especially for, as we talked about, this younger group. But also e-commerce is going to stay elevated. It's going to be a true omni-channel world, and it's going to be very important that you have a very good online user experience that connects seamlessly to your in-store experience. So people can go in store and buy and get it shipped to their home, or they can shop online and order and pick it up in store, or any combination of those things from a multi-channel perspective. The brands that really design their consumer experience the right way are going to be the ones that win and get the largest share of retail recovery.
Well, I, for one, cannot wait to go back to bricks and mortar, although I love ordering online too, but I miss it. Anyway, Brandon, again, thank you so much. That was just so informative. Look forward to any follow-up questions. And also to the audience, please join us next Friday for a really exciting look at what's happening with social media marketing in this most unusual summer of 2020. We will have Amanda Zajac, our beauty e-commerce strategy lead, and Kara Tucker, our head of social media, talking about what's going on for brands in social this summer. So please tune in for that. Again, Brandon, thank you so much. Let either of us know if you have any questions anytime, and have a great weekend. Thanks so much. Bye.
Thanks, everybody.